pre-market, CMG, August 6th. The equity of CMG, which finally broke out, that we called for that long trade. We bought options on it in several accounts. The thing that we would like to tell people is this is a 60-minute call chart, and these were at $1, and they traveled right up to $4. They made a $3 movement. They made their biggest movement on this 60-minute chart on the up and out of the money $300 call when CMG on this 60-minute chart on Friday with the broader market had gapped up. But you see what CMG was doing on certain days was shaking right down here to that $278 handle. We had shorted CMG during this quarterly July 2012 earnings season, and we have those videos and why it would go down. But then we became very aggressive long buyers on it because, remember, with the economic slowdown, which is okay with us, and them having to readjust their numbers and their EBITDAs and things of this nature, is that we felt that it would be compelling to own it down around 260, 270 area for good trades. Remember that the bellwether CMG is still a very high beta stock that has performed well for investors in Wall Street, and intraday market making skills that we use work well with CMG. Once again, we are going to highlight this CMG trade, and part of what we're going to do with CMG is I'm going to go to a daily chart on the CMG so you can kind of see what it looks like. And you can see here, when you look at that 60-minute chart, you can see here when I draw this lower horizontal trend line for you, MMTs and pre-market, is it finally got that major support area. So let's take a look way back over here. Here's that bottom during this time frame, is that was that support area. Now here's the earnings where we said it had to get mutilated and get trashed, and because it did, and we made lots of money on that short, and we did that before the fact. But what I am reiterating is that it's time to be long, as we are off of these bottoms, because it's still, that's the gap down news from the earnings, and it shook people out, but it's got that major support. It's above the 10-day simple moving average. Things are looking better for it. It got fairly oversold for that short-term bounce, and how to trade the calls and how to take the money out of the call side. Already made a fortune on the put side of the market, buying puts before the earnings and it coming down, and it did. So we're right. Now it's time to look at where that consolidation is. We'll point it out, and how this bottom holds on this daily chart. Not only that, when I go back to the 60-minute chart is when it does pull back in market volatility. Let's say I do get a pullback and a drop down to around, let's say right around 294. Okay? MMT. Right about here is going to be the half bar, so it's going to be 294.68. Look in your MMT platform. Then we'll look at the 295.60 area and what this drop down would be. This was the great 60-minute. This is called a 60-minute gap on Friday, and we had a lot of MMTs getting on that gap up. That's that lower bottom of that pivot where it would hold, and then with the broader market on fire on Friday from your jobs report number. You can see where we hit the 60-minute kind of resistance channels. So therefore, we're going to look at where the 60-minute support areas are going to be. And therefore, we are going to take the complete option chain and figure out where the next upper end of that resistance will be, so that we can engage in a high flyer with up and out of the money calls. Like here's a 310 call. And I'm going to throw the 310 call on here. It's a weekly August 10th one. Remember, it's weekly, but nonetheless, let's take a look at it live. Here it is. Was that 60 cents? So basically, what we're going to do, because it's a weekly call, on weekly prices are quite different than your regular. So if I look at a regular monthly expiration, you can see that you're going to have a lot of chart data on this 60-minute chart. But these things were down here at 50 cents. That's the time to buy the 100 contracts, because now you're up $20,000 on a $5 investment based on a Friday breakout in the equity, which took those $310 calls, regulars, right up here to the $2.50 mark. That's what it's about. I'm featuring, once again, Chipotle Mexican Grill, oversold, Friday's breakout, call put strategy, trade of the week.